Welcome, everybody, to another episode of the MedTech Business Academy, brought to you by the MedTech Experts. I am joined today by my semi-esteemed colleague, Scott Alexander.
It's not that great to be here. Yeah, thank you.
So we are proud today to talk as we record this episode right before Halloween, October 2024. And we are talking about something that seems to be on everybody's minds that I talk to in some way, shape, or form. But it is basically, what is 2025 going to bring us? Because it has an impact on how strategy is executed in the final quarter of 2024, but it certainly has an impact as to how are companies approaching 2025. There's so much that's happening as we speak right now, right? We have changes in the economy. We have changes in Fed policy. We have, just so happens, Scott, I don't know if you've heard, but there's actually an election coming up.
Really? This year there's an election? Okay.
There's actually an election coming up. People are paying attention.
Community or like...
No, there's actually a leadership election that's going to occur. Okay. And people are talking about it. I haven't seen it.
I always vote for the incumbent president, so I plan on doing that. Is that possible?
Yeah, you know that you probably should read something somewhere.
Noted.
Just get caught up on the news a little bit.
Okay.
But so Scott and I are going to be talking about what are some of the things that we're hearing from companies talking about how they're going to approach 2025, and more importantly, really what matters to everybody, big company, small company or not, it's capital flow. Mm-hmm. Where is capital going to go in 2025? So with that, we thank you everybody for joining another episode of the MedTech Experts. This is the MedTech Business Academy. Scott, you talk to clients all the time.
Yep.
Occasionally your customer satisfaction score is probably, who knows?
I didn't know they could be negative. I didn't know.
But, for the ones that you tend to pretend that are real, that are the positive ones.
That's right.
From those, when you're talking to clients, what are they telling you about what they're expecting out of 2025?
I think in general, we're seeing people are relatively bullish. So as of this recording, we're really heavily into 2025 planning, and every client that we talk to and a lot of the prospects we're talking to as well are extremely bullish and really trying to make a mark in 2025. I think as we look at 2024, it was more of a limp-in year. Like people nobody came in with yep. Thunderous applause or trying to really make a name. And it is very different coming into 2025. So.
Yeah, I agree. We deal with a pretty wide gamut of different types of companies, from very large to very small. And the thing that I'm seeing the most is there's definitely a little bit of a more progressive spending thought mm-hmm. process. And like you said, I think everybody held back a little bit 2024. And, if you look at macroeconomic policy, some of that was Fed driven, because yep. if you're a CFO and you're sitting there and you're having somebody say, hey, we should put this money to risk, invest it, put it into some sort of new program. And the CFO is saying there, hey, wait a second, I've got an 8% deal with my bank right now where we've got money, just no risk at 8%. I'm taking that. Right.
Yeah.
Well, as the Fed starts easing, at some point, 8% becomes 4%, becomes 2%. That's mm-hmm. no longer a viable investment philosophy. And that goes for the big companies, and that goes for the small companies that need the big companies yep. to be putting that money to work, or the venture capital money. Yeah. So what I think we're going to see in 2025, if you're a small company right now, from a bunch of the small companies that we talk to who are again, reliant on the M&A engine to be vibrant and didn't necessarily see that in 2024, I think 2025, again, as we sit right now with the expectations of a Fed easing policy mm-hmm. And continued rate cuts potentially, and obviously all the other things that potentially could stir that up. But as we sit right here in October, I think it's going to be a banner year for M&A.
Yeah, I think you're right. I think we're going to see a lot of acquisition next year. I also think that we're going to see the cost of borrowing go down. And exactly to your point, it's like I can't earn 8% on cash, and now I can also get capital for much lower rates, more like what we were seeing in 2022, for example.
Right.
And I think just the mentality that numbers are getting better drives a lot more investment, which is great, right? Like that's what spurs growth in the economy, and that's what spurs growth for companies. And so, I think if we take a step back and put ourselves in the seats of our listeners, we're going to be thinking, okay, well, what does that mean to me? Well, the reality is we should anticipate acquisition opportunities, either being the acquirer or being acquired potentially. We don't see, well, I think we saw a pullback on acquisitions by private equity. I mean, that beast is not leaving, right? So it's going to be here forever, and they're sitting on capital that they have to invest, and a lot of them are getting to the point where they're 3 to 5 years on a lot of their investments. Like if you think about when it started to happen, it was really like 2020 was when we started to see a lot of the 2019, 2020, when PE really started to become a thing and got bigger over time. So they're getting to the end of their horizons for owning a lot of these companies that they want. So they're going to be looking to have some churn in selling their portfolio, and then they're going to be sitting on a bunch of cash. And they don't want to sit on a bunch of cash. So then that investment cycle picks back up. So I think PE is going to be big. And so then if I'm running a company, maybe I want to get acquired, or maybe I want to be an acquirer because capital is going to be lower. The other thing is we have to be aware of the fact that if we're either venture-backed or competing against venture-backed companies, they're going to be much more aggressive in 2025.
Yes.
And as a result, we have to be ready for a more competitive landscape as it relates to kind of growing our businesses. So we need to be prepared to lean in because other people are already leaning in, and you don't want to get left leaning back.
Yeah, I think it's a great point you make about the competitive landscape, because anytime there is new money at play, but we're still all competing for the same dollars, right? So from that standpoint, you better have all of your strategies, all of your tactics buttoned up now to make sure that your execution strategy is absolutely sound. Get that value proposition locked up. Make sure you've got everything properly secured for how you're going to execute starting out of the gun, right? I mean, really, if it's October right now, you shouldn't be sitting there thinking, okay, we'll worry about January when January gets here.
Right.
No, January is veritably yesterday. For so many of these companies. So if it's going to be an ultra competitive environment, you need to be ready to make sure that everything is lockstep and barrel right now.
Yep. I think you're right too about the point about there being only so many dollars, because at the end of the day, many companies are selling into hospital systems. Hospital systems margins are really best of years, they suck compared to what a medical device company or a pharma company would expect to see on the bottom line. And so, there's this continuous belt tightening that's happening at the provider level. So they're trying to minimize dollars. You're trying to gain share, gain dollars. So where does it come from? And if people are starting to get more competitive, you're going to have to fight harder for that. One of the things that we're starting to see more of, and this is a trend that's been happening over years, is the idea of moving outside of the four walls of the big hospitals. So moving into outpatient, moving into post-acute, things like that. That's another area that I feel like has some low-hanging fruit that as you're trying to grow inside the big house, maybe you start to think about what you do in the backyard as well. I don't know what you guys are seeing, but that's been something that we're seeing.
It's the thing that I think that it's the canary in the coal mine, but nobody wants to admit that the canary is starting to sing, right? And I think it's one of those things that, again, in the spirit of Halloween, people see the boogeyman coming, but it's not coming if your eyes are closed, right? And I can't see what I can't see. So I think you make an excellent point from the perspective of this divergence from the big house to a much smaller community of small houses. I think everybody in healthcare knows that's coming, but I don't think anybody wants to address it until it's forced to be in front of them. So you're right. I mean, if I'm a company right now and I'm potentially thinking about in 2025, if those investment dollars are going to be there and they're going to be released, how do I make myself look more attractive Because, if anybody doesn't know, right, venture capital, it's all a filtration process. Same thing with private equity. They look at, let's just take easy numbers. They look at 100 companies to make one investment, maybe two investments max, right? And they take a better part of 8 to 12 months. And sometimes that investment is $2 million. Sometimes that investment is $100 million. Granted, the size of the fund, all these things at play. But they spend theoretically the same amount of due diligence on the $2 million check as they do on the $100 million check, which is a great chunk of resources. So all these companies that line up, if you need to find a way to separate yourself from that pack and be more attractive, Scott, I think you make up an excellent point. If you can showcase that, yes, I'm well positioned for success in 2026, but really, here's our thinking for where healthcare is going in 2027. And I've already started thinking about that. That gives you a significant leg of attractiveness over the other 99 competitors.
Before I respond to that, can I just say, I think the idea of a boogeyman that only comes at you when you have your eyes open sounds like that's a movie right there.
You're right.
I mean, like, could you imagine how terrifying that would be if there was a boogeyman, but like, as long as you kept your eyes closed, he wouldn't move at you?
It's kind of the opposite of like Freddy Krueger, because Freddy only came when your eyes were closed, right?
Yeah. Or the Boo Ghost from Super Mario Brothers.
Yes. Or Casper, the Friendly Ghost.
Yeah. Also Casper, known for his horror movies. Speaking of tying it back in, yeah, I mean, I think what we're going to see in 25 from a capital standpoint is a lot more dollars flowing in. You're dead on that. What we're seeing today from the venture fund community is they're investing in things that are not your traditional medical devices going into a hospital for a surgery. So we're seeing a lot more investment in telehealth, which by definition then propagates out into, diagnostics and monitoring, things like that. So how are people doing it in telehealth? Software as a medical device. What are we doing inside an EMR to help identify patients that have particular disease conditions that can be treated with very expensive drugs from pharma? Like, those are the kinds of things that we're tending to see getting invested in. And so as a result, if you're trying to grow your business, kind of like it makes sense to see what other people are doing and try to emulate it. And the big takeaway from all that is it's not about sort of that one big hit. It's more about, hey, how do we get into a bunch of areas where margins generally are better? Your logistical considerations are higher, but the competition is generally lower and decision-making is faster. So that's something to think about as you're competing against these other entities out there.
Yeah, we talk to a lot of clients about the dynamic of CFO, right? Clinical, financial, and operational. Focus your value proposition on those three dynamics and make sure you've got something that fits. Well, I think if you think about it, companies have historically in our space been able to identify, the clinical, right?
Yep.
And then they have been able to extrapolate some sort of financial, if you use 5 of our widgets, it saves you, blah, blah, blah. But I think what you just said there, Scott, a minute ago, it's the operational component that I think so much of the provider community is telehealth, right? That's an operational dynamic.
Yep.
Right? It's saying, hey, labor is challenging. Throughput is challenging. So therefore, if we can manage through a telepresent labor force and have a throughput situation where the patients are only come through via telephone call or obviously video call from perspective, right? There's a throughput thing that we fixed. So I think the O of the CFO paradigm has become so much more important. And I think it's probably going to be even more important in 2025. And I think that's the piece of that three-legged stool that so many companies just forget about and they miss. I think you make a great point there.
Can I piggyback on that? And we could do an entire episode about this, but I totally agree. CFO, and I'll throw in IT as the other. So the idea is clinical, financial, operational, and then like technical or technological. I mean, there are deals that are happening from big companies that are trying to sell into IDNs that are getting killed because the CIO says, nope,
Yes.
You need to have integration with the EMR. Guess what? I got a 2-year backlog of projects to integrate with Cerner, with Epic, whatever. And so I think if I could kind of go down this route a little bit, and this is really tactical, but like one of the things that I see people missing is they don't go through a logical process on this idea of understanding who your personas and then how do you measure to them. So you got 3 or 4 personas, depending upon if you're connected to the EMR. Each one of those people has 10 to 15 things they care about, right? If it's financial, it's total cost of ownership, it's monthly payment, right? You can categorize these the ROI, that sort of thing. What are you doing to actually be able to tell those stories, to address those questions to those 3 or 4 personas in a way that you can automate and scale? Like that's the thing that I don't see anybody doing unless you're a startup. This early companies get that. The companies have been around for a while, just don't. And they're trying to bang on Dr. Smith, like get this through the VAC. And the reality is like your operational person sitting there like, no, like it doesn't make sense. You're going to blow up workflow for the nurses. Why are we going to do that? So.
Yeah, no, I think it's really interesting. I just think, I mean, when you look at it, right, we live in a legacy industry. I mean, it's $4.8 trillion. That's the last measure. And again, when you look at that on the GDP scale, the U.S. healthcare market is the 3rd largest GDP in the world, right? It's staggering, right? It's staggering that a portion of our GDP ranks in the top 3. Right. And it speaks to our prowess, but it also speaks to the inefficiency, because we know in multiple studies, 15 to 20% of that is probably rife with waste. Some of it just CYA waste. I have to do more tests to make sure, I don't get sued. Some of it is just waste because of waste. Right. But along those lines, if we think about the operational efficiency with a tech dimension, and you speak to a CIO who has a 2-year backlog, okay, as you referenced. But let's be honest, right? What you were talking about there was a WIFM. What's in it for me? And every persona has a WIFM. But the WIFMs are different across the personas.
Absolutely. Yep.
Okay. So if you tag that WIFM properly for each one of those 4 personalities, the C, the F, the O, the I, okay, they will increase your prioritization. Yeah. Right. So then what are we talking about? Customizing the way you approach the market. Right. I can't tell you how many people I still talk to that just give blankets. Right. I'm like, okay, so today you're going to talk to Dr. Jones. So great. Okay. They've got a statement. Like next thing you're going to talk to the supply chain director. It's the same exact story.
Right. Yeah.
Right. Now you're going to talk to the CNO. Well, the CNO is heavily on the O side of this today. Yeah, clearly they're clinical, but it's about, she's worried, he's worried about all the dimensions of how do we get my clinicians to be working on throughput. I've got labor challenges. I've got all these things going on. And if your story is just going to the CNO and being like, here's the clinical data. You're stuck.
Amen, brother. Like those companies are really struggling, and it really comes down to the fact like they don't understand the customer. They don't understand the dynamics of what it is to purchase. And maybe we did an analysis of our client base. This was back in September, so a little over a month ago, and we looked at for companies that like why do companies fail? Why do companies, like if they're in business and they're in medical devices, but they don't work out, like why? And about half of all the companies that fail because they don't have a commercial strategy that actually creates a sustainable business. They can't tell you what's the buying process, who are the people that are involved, what do they care about, and how are you helping each one of them individually to make their lives better? Like they just can't do it. And you can see it. Like if you see all these companies going out of business, they usually go kind of quietly, but like the venture-based businesses that kind of die out. It's because they didn't have the commercial model that actually would set them up for success in the long term.
I mean, I'll take it one step further because we have examined this. It's actually 42% of companies fail within their first 3 years. And most of it is because they don't know the market.
Yeah.
Right. We've actually examined that. the ignorance with which they approach the market is so prevalent, right? And it comes down to everything: strategy, value proposition, knowing commercialization. How are you going to approach it? What is important to your customers?
Yep.
But they come at it. And again, part of the challenge, I always say this is, and there's nothing wrong with this, so much of the small companies and the inventors in our industry come largely, this is an over characterized statement, but they largely come from two dimensions. They either come from a physician, sometimes just a clinician, but very physician driven, and or an engineer.
Yeah.
Right. And sometimes in the spirit of forest and trees, they are so tied into the bark of their tree. And sometimes that makes them successful. They can see clinical need that nobody else has experienced. We can all just talk about, right? But at the same token, it's being able to see 5 steps ahead to realize that you're in a forest of other trees, and what makes one tree rise higher, what makes one tree get more sunlight, get more oxygen, whatever it may be. How do we create that dynamic? And that is what I think happens, is the myopic viewpoint of some of these inventors. Whereas those other companies, they say, okay, I created something. Let me go get some insight. Let me bring in some experts to help me understand what this forest looks like.
Yeah. And the good thing, kind of looping it back into the capital piece, it's cheaper if you think about total cost of capital to do those kinds of things. It will be cheaper to do those things in 2025. It'll be a great time to invest in making sure you have your market the right way, that you understand where you're going, you got your value proposition dialed in, that sort of thing. And I don't know about you, but like I was saying before we started the call, like we are definitely seeing that on our side of particularly venture-backed companies who are coming to us to figure out like what's the market, how do we find the segments, how do we then take that knowledge and put it into like execution to then learn. Like that's a big area of focus. And I think this is the year to do it if you haven't done it already.
Yeah, I think if you're going to be chasing those investment dollars, and I think if you want to separate yourself as 1 out of 100, frankly, I think one of the things that you should be doing is taking the courage and investing. And believe me, we do this business, but I'm not advocating it as a self kind of aggrandizing discussion here. It's more of what you need to do to not be in that 42% failure basket. If you want to be part of the 58%, invest in some market research. Showcase those venture capital, to those PE firms. Hey, we already know the market because we've checked it. We've asked the market. These are the questions that are coming. This is why we structured our strategy, our product, all these things that, frankly, I think that is going to be king. And that's where the capital is going to flow to, is those companies that know.
Yeah. The other thing too, I think just kind of build on that in terms of where the capital is going to go and how to tell your story and that sort of thing, is we're living in a more and more segmented industry where, and I think, Skender, you probably see this too. Like we talk to med tech firms and orthopedics, and they don't want to hear about examples from cardiology. They want to, okay, well, where have you done this other thing for another orthopedics company? And then you have an orthopedics example. They're like, yeah, but I'm more like hand, and this is large joint. And so, that translates over to customers and prospects for these companies as well. If you're a critical access hospital, or you're a small independent, 200 bed hospital, independent in somewhere in Missouri, you don't want to hear necessarily about Mayo, right? Because you're like, well, I don't have the resources of Mayo. I've got, 200 beds, right? Yeah, like I'm nothing compared to that. So it doesn't translate. And so where I'm going with this is, as people are starting to invest in understanding the market, it really comes down to, you need to be able to tell the story and have the data and have the products that really align with these different segments and think about them differently. And until you start to do that, what's going to happen is we're going to see greater and greater fragmentation, and you're going to lose more and more market share if you're telling the same blanket story across personas and across client types. What do you think about that?
Yeah, I mean, look, things like AI are here.
Mhm.
They're in their infancy stage still.
Yep.
But it's things that the hospitals, particularly from an operational standpoint, are looking at. And if you want to see where the capital dollars are flowing,
Mhm.
simply because of the consumer interest, right? All of us are intrigued by AI.
Yeah.
I would venture that only 1% of people actually know what AI can do for them.
That's right. Yep.
Right. But all 100% of us are like, AI is intriguing. I don't know what it is, but it's really cool. And because of that dynamic, the venture money, the private equity money is going to flow to those that can state we're doing something that is AI based, right?
Mhm.
Really, what they're looking for is what we started this conversation with. AI is meant to be an operational kind of multiplier, right?
Yep.
That's all it really is. So therefore, if you're not talking about your product, even if you don't have AI in it and you still have a mechanical device, you have to showcase how you have a product that is an operational multiplier, because that is tantamount on what is everybody's minds today.
Mm-hmm. Absolutely. I mean, I think internal operations, I think AI is going to be transformative in a way like the internet has been transformative.
Yes.
I think anybody who doesn't see that is just not really paying attention, but it's going to be like the internet, right? If you think back to where we were in like 1995 when it first started coming out, we would get literally discs in the mail from AOL.
Yes.
To sign up to be able to dial up and go to MySpace. Prodigy. Yeah, exactly. Prodigy. And that's the season that we're in right now with AI. It's going to get better, but you're absolutely right. It has to tie back into that operational piece, which frankly, if we think about it, then allows you to address some of those lower market segments where your cost of logistics goes up because it's just more stuff. You can now manage that a little bit better, and those become more profitable as a result. So,
yeah, I firmly agree. I think because we still talk to a bunch of companies that haven't quite figured out how do you talk to people about throughput? How do you talk to them about labor efficiency? How do you talk to, and forget, how do you talk about adoption?
Yeah.
Right. There are so many companies that we talk to, and I'll look at the product and I'll be like, man, that is a high touch product.
Mm-hmm.
And that means there's a lot of people that need to touch that to sign off on that. And when you're still dealing in an environment, which from what I heard recently is we are down to about an 11% turnover rate. Okay. In some places, some places are bragging about a 7% turnover rate. Okay. At the clinical space. Right. And so when they're bragging about this, because we were at 19%, that essentially means 1 out of 5 every new employees is gone. Now you're at roughly just 0.5 to 1 out of every 10.
Are those monthly numbers or are those annual numbers? Those
are annual numbers.
Okay. Yeah.
Yeah. But I think it's kind of like a monthly run rate. Right. It's an annual run rate that's being modified from what I'm hearing. So they have improved from where they were, but they're still not 1%. They're still not 0%. They're still turnover. So if you have a product that has high touch and you're not talking to people about operational efficiency, onboarding efficiency, how do I create it? So how am I going to help you help me? Yeah, that's great. We won. The spreadsheet says 28% cost savings.
Yep.
But the reality is, if you're talking to a CNO and she's like, that's great, you convinced somebody in supply chain it's 28% cost savings. I don't have the resources to make this go through. What are you going to do to make it easy for me to create so my employees will adopt this?
Yep. Yeah. And that is the thing that very few people have. And that's what jams up their sales is we're getting in, we got a clinical buyer, he's on board, right? The Dr. Smith is in, but it was about 10 years ago when the chair of a department started losing their veto card and they had to start to, manage through coalitions. And so finance has a veto card, ops has a veto card, like the chief nursing officer, IT has a veto card, and people have to adjust to the fact that those 4 personas are involved in every decision that happens. So getting to that, I think, is the name of the game.
Yep, I agree. So here we are at the top of our time. I guess, what do you think is the biggest takeaway from your perspective on the flow of capital 2025 preparation? What do you think?
I mean, I think the flow of capital is coming in. We're seeing that already. I think it's only going to strengthen. We successfully dodged getting into any level of politics about who's going to win the presidential election, and we won't go there. But what we will say is we'll have a lot more clarity in the marketplace post-election, regardless of what happens. And so I think what we're going to see is we're going to see a lot more dollars flow into the system, either from an acquisition or an investment standpoint. And 2025 is a year that you really want to make sure you have your story dialed in, because you can get a lot of wind in your sails if you play the cards right.
Yeah, I agree. And for anybody wondering, why are we having kind of this, 2025 look ahead in October? Usually it's a December type of discussion. It's because of the fact that you have to have your ducks in a row now. Mm-hmm. That value proposition, do your market research, right? If you're a small company vying for that big dollar acquisition, make sure you're making yourself as attractive as possible now. Yep. Right? Do that market research, figure that out. That money is going to flow. It is an inevitability right now as it stands. Rates are going to come down. They have to. The entire global capital system relies on lower rates. We can't keep them there where they are. So they're going to come down, barring any sort of economic calamity. And so with that, you have to be prepared to take your piece of that pie. And the only way you're going to do that is by making sure as Scott said, your strategy, your value proposition, knowing your client, making things that are pertinent to them, making sure you're identifying that operational capacity and presenting sound operational value.
Amen.
So with that, we appreciate everybody making the time today. Thank you for joining this episode of the MedTech Business Academy. Again, we always encourage you to listen to our sister episode, Women of MedTech. And we certainly, there are a ton of topics there that touch upon and continue some of the ways that we talk here as well. But we really appreciate everybody making the effort. Thank you, everybody. Have a great weekend.